You're listening to Cash and Sass. I'm Lisa Marie, your go-to gal for all things money. As the Sassy Wealth Queen and the brains behind the Sassy Wealth Coach, I'm here to take you on a thrilling ride from the financial chaos to sassy and sexy money. Welcome back, my sassy friend, to another episode of Cash and Sass. My name is Lisa Marie. I am the Sassy Wealth Queen and the brains behind this podcast, and of course, the Sassy Wealth Coach. And today with me, I have Marcia Riner, the go-to guru for all things business growth and greater profitability. With over 25 years of experience under her belt, she's the brains behind Infinite Profit, where she's the CEO and known as the Profit Booster. Back in 2017, Marcia realized that business owners often face a tough time selling their companies, so she decided to put her knowledge to good use and started her consulting firm. Now she's the secret weapon for entrepreneurs hungry for more profit, growth, and a killer exit strategy. What makes Marcia stand out? Well, she's all about shoring up the foundations, thinking outside the box, and creating unique strategies tailored to your business. With her by your side, you'll gain the confidence and knowledge to tackle any challenge and seize exciting opportunities, whether you're looking to boost those profits, expand your reach, or plan that future sale. Marcia's got the insights and expertise to make it happen. And of course, say goodbye to business woes. Hello to a path of Hello to a path to success. Awesome. Thank you so much, Marcia, for being a guest on my show. I am tickled to have you. And of course, we all know what we're going to talk about. We're going to talk about anything and all things money because that's what Cash and Sass is all about. And today, what we're going to talk about is we were discussing how little changes equal big results, or as she likes to call them, pulling profit levers. And so I really would love to dive into that and what you mean by that and also your experience from that so that my listeners understand.
Yeah, thank you. And thank you for that introduction. And thank you to my boyfriend, Chad GPT, for helping me write that. So I guess it got a little mouthy for you or wordy for you, but it's been fun to date Chad as much as I have been lately. But it's interesting. So a lot of the things that business owners, or a lot of challenges that business owners face, is that they get stuck in a rut, right? And they keep doing the same thing over and over, looking for different results. And what happens is if you introduce change to a business owner, they start to freak out, right? Or even if you ask the business owner's employees to change their method or operating procedure, and they start to freak out. So what I noticed in the years of helping people is that oftentimes little incremental changes can actually have big results when done well and done in the right place and at the right order. And so that's where I kind of came in with these little changes and looking at them, and they're easier to accept and swallow and get used to implementing. And it gets rid of that freak out level with the owners and their teams.
Awesome. So what are some of those smaller changes that you talk about, or those little changes that you would have them make so that they could see more profit, especially even if it's not a big company, but if it's an entrepreneur, a service-based provider online,
Sure.
And so they're not spinning their wheels, as I like to call it. I call it running around in circles in the dark. I do. That's what I call it. That's what I call it. That's what I call it. It's like not knowing your numbers is not knowing what's going on with your money is running in circles in the dark. I swear I should actually have that trademarked. But that's what it's
t-shirt.
like.
It's a perfect t-shirt.
Or both.
I love it. Okay, yeah. So one of the biggest things, and I work with professional firms, I work with mom and pops, I work with what a lot of people in my industry will call micro businesses. These are businesses striving; they're already in momentum, so they've already got the cash register ringing, but they're trying to reach that $1 million. They're trying to reach that $2 million mark, and maybe they're at 100,000, or maybe they're at 200,000 or 300,000. So we're not talking huge conglomerates that can do a lot more than us little people can. But when thinking about that, you are spot on when you're talking about knowing your numbers. And that's one of the first strategies that I do when I get into a business is, first of all, I try and find enough money for them to pay me. But the second thing is really, it's like we forget that it is a business and we run our personal stuff through our business because our accountant says it's good for taxes. Let me put my cell phone on there, my car on there. Oh, if I go out to lunch, let me put it out of the business. Let me, I pay my kid to take out the garbage, so let me pay them through my company. And what it does is it affects your bottom line, like drastically affects your bottom line. And when you're looking to grow your company, oftentimes you're going to have to reach out to somebody sometime in your life and get some added cash or a credit line, or you're going to need a credit card to be able to buy a new computer or a piece of equipment. And when you look at the profitability of your company, because you're running all of your personal stuff that could even slightly qualify for a business expense through your company.
And sometimes doesn't qualify at all.
I'm being generous here. But yeah.
No, you don't have to be. You do not have to be. There is no subject that is off the table on this podcast, which is one of the reasons why I've created it. So we will just put it out there that sometimes that's the whole point of knowing what's going on with your money anyway, is also, making sure that you're not commingling those funds.
Right. Oh my gosh. Yeah. Yes. That is a wicked place to be in as a small business owner, is that commingling of the funds. So what I do in doing that, and these little changes that I ask my clients to make, is, first of all, let's look at your expenses, right? I jokingly say in my first book, behind us back there, Big Profit Secrets, I tried to trademark this, but it didn't work. Income minus expenses equals profit. Duh. So, you can look at a couple of levers, right, to pull that will help you to improve your profitability. And the first one is you always look at your income revenue streams and how you can boost those. But then the second place that you really want to look at is your expenses, which we just talked about, and looking at the things that you're running through the company. And I ask my clients to think about and answer 3 questions on every single expense. So we're talking dirty here. We're getting all the way down to the numbers. And like, you're printing out your bank statements, your credit card statements, you're running a balance sheet. We're looking at QuickBooks. However you're looking at it, you're looking at every single line item. And you're asking yourself this question: does it produce a customer? Does it keep a customer? Or does it increase the lifetime value of the customer? And if you can answer one or many of those on the answer to those questions on each one of those line items, then you can keep the expense.
Okay, so wait a minute. So it's one is, does it provide a customer? Does it produce?
Does it create a client, a customer?
Right. So does it create / produce a client or a customer? Does it keep the client or customer? And what was the third one?
Does it improve or increase the lifetime value of your customer? If you have a one and done customer, you have a job. You probably want to have reoccurring income from your customers and have them rebuy from you or commit to longer relationships or so on. So you're not having to go hunt customers all the time. So that lifetime value of a customer, when you bring somebody on, and you look out future as to how many times will this customer purchase from you in a normal life cycle, then that's the lifetime value of the customer. Because hopefully they won't buy just one time and walk away, right? They'll come back, or they'll repeat, or they'll up buy, or they'll cross sell, or wherever options you have to increase that. But those are the 3 critical questions that you ask when you're looking at your expenses. Does it produce a customer? Does it keep a customer? Does it increase the lifetime value? If it doesn't, let's kick it to the curb for a little while and see, do I really need to be spending that? And that little change, it can be kind of painful, right? I need to get my nails done, so I just run it through my business expense.
No.
Wrong, right?
And no.
But you'd be surprised.
Oh, no, I wouldn't. No, I wouldn't. I know. Look, I wear my brand, okay? Color, everything. I cannot charge my coloring, the coloring I pay my hairstylist, even though it's my brand color, I cannot pay pay for it. I mean, it can, but then it's going to be marked as an owner's distribution because it cannot be expensed through the business. It is not a business expense.
It shouldn't be expensed through the business. But when we have a lot of these, and I love accountants and I love tax preparers, but they tend to be looking backwards and say, look, let's run what we can through so we can cut your taxes as much as possible. See,
my tax advisor won't. My tax advisor will beat my butt if I think about, I'm gonna message her and say, hey, by the way, can we go ahead and try and put my hair coloring through my business? And I guarantee you she's going to be, what have you been drinking? And stop.
Well, now if you're on stage and you're talking to public, as a public speaker.
It doesn't matter. It doesn't matter.
Be surprised what you can do. You can put your clothes through. You can put your image and branding through.
No. The clothing, the CPAs do it as sneaky. However, the law says if you can wear the clothes anywhere else, you are not allowed to expense it through the business.
I love it. Thank you for that clarification.
People are like, oh, so I can't go buy a suit to go talk on stage through the business? No, you are not supposed to expense it. So what can be expensed clothing through the IRS is uniforms, like doctors, nurses, the chiropractors, the nail technicians who are now wearing uniforms. They only wear those the scrubs. They only wear them at that salon. They can expense those through their business. However, if you can wear it somewhere else,
love it,
as personal, it cannot be expensed through the business. Now, do people do it? Yes, absolutely.
Should they do it? No.
Should they do it? No. If they're ever audited, will it be charged back? Guarantee it. However, I can't tell you the likelihood of how often you'll be audited. I just tell you that the IRS laws, the laws of expenses is red and gray. There is no black and white. It's red and gray. And you want to stay as far away from the red as possible and stay in the gray. So you just want to make sure you're not teetering over that red line.
I love it. Lisa Marie, you are fantastic in the education you provide your audience because you know your stuff, right?
I know just enough to know that if I do that, it'll get me in trouble.
Exactly. But see, that's why people like you and I come in and we're so helpful to business owners because they're thinking, they're going, well, what can I do? And if you've got a bookkeeper that doesn't know the laws as detailed as you, and they're trying to help their client cut their taxes down, and they're running things through that they shouldn't have. And I think, nails was an exaggeration and your hair was an exaggeration, but there's a lot of things that you can run through your company that you probably shouldn't. And your audience is so lucky because they get to hear this stuff in plain, simple English. And oh, hell no, this is not what you should be doing. And that's great. So thank you for being the resource that you are.
Now, I will put a disclaimer on there because this is a podcast and I am not a CPA or a tax professional. I do have accounting.
Nor do you play one on TV.
No, I do not. I will put a disclaimer on there that you need to make sure you talk to your tax professional. And when you are a LLC filing as an S Corp, that's when the CPAs will make a suggestion of you putting your kids on payroll and paying them because it is a decrease in the tax bills. And it's also an increase where it's basically free money. Don't ask me the legalities of it. Again, talk to a tax preparer. But that when you're a solopreneur like me, right, sole proprietor, I'm an LLC, but I don't file as an S Corp. I'm not putting my kids on payroll unless they're actually working for me. Okay. Like my 21-year-old, that's the only way. Whereas when you're an S Corp, you can legally put your kids on payroll for the tax cut, the tax savings, and they don't have to pay income tax on the money received up to a certain amount. So you could literally put it into it's not a Roth, but these different types of savings to actually accumulate money. So there is a legal way to do that. It's knowing the difference between the type of business, whether you're filing as an S, and please do not go run and file as an S Corp, because if you're not making a certain amount of money, you don't need to be filing as an S Corp. I'm not getting into that subject today. I'm just stating a fact. I am not an S Corp yet because my tax advisor has looked at my numbers and said it does not make sense for you to do it because right now for sole proprietors, we're getting this huge tax credit. And so it just doesn't make sense. When it makes sense, we'll switch, right? So I know there's some people who will suggest go do it right away because it's going to save you all this tax money. However, all I'm going to say is make sure you're doing your homework and you understand what's required of you when you do file an S Corp. And one of the things that's required of you is you have to be on payroll with taxes taken out, which means your company's going to pay payroll taxes.
A reasonable income, a reasonable salary.
Yep. And you will now have to pay for 2 tax returns to be filed. So if the benefit ain't thousands and thousands more, I don't suggest doing it. Exactly. I don't suggest doing it, but that's my 2 cents. And again, I go talk to a tax professional.
Love it.
But, you're right. The small changes is what, I tell my clients to do a deep dive. I tell them, again, not knowing your numbers and what's going on with your money is running around in a room, in the dark. You're knocking over stuff. And if you don't know what's going on with your money, you can't make the changes. But in order to truly make the changes or truly know your numbers, you have to do what I call a deep dive. And I don't care if you have QuickBooks. I don't care if you have an accounting software. I'm still requiring you to pull your bank statements, your credit card statements, and go line by line. And my clients get aggravated. You're having me kill trees. Yes, I want you to print them.
Oh, yes, you are, because there's hidden money locked in your business because you don't know it was that subscription you signed up for.
And not only that, but when it's in front of you and you're highlighting it and not just looking at it on a computer, it becomes very, very real.
Mm-hmm. Mm-hmm.
And people are like, "But I want you to do this for me." No. You have
you got to feel it. You got to feel the pain.
I require you to go through the process with me. I am there. I support you, and I do help you. However, that part of the process has to be them, and if they're not willing to do it, I won't work with them because the only way you're going to become more mindful is for you to actually see it and highlight it and separate the different charges. Whereas if I separate it and just give you the totals, there's no emotion attached to the totals I'm giving you. Whereas when you're highlighting it, there's emotion attached, there's feeling attached, and that makes a huge, huge difference because it's you doing it. And again, it's on paper, right?
Exactly. Well said. Great exercise to do, and it should be done frequently, at
quarterly
least twice a year or 4 times a year. And I know business owners start to go, but that's what I pay accountant for. That's what I pay my bookkeeper for.
They don't go.
Well,
you know what?
They're not
looking
at
stuff.
it. They're not back. They're not looking at you going, "Did you really spend that on that?" They're not looking at you in the mirror and going, "What?" Maybe you should have your spouse come in and look at your numbers with you. So you have to justify them to somebody else. But yeah, that's a great exercise to do. And
the big thing is
that you do it, it's painful. The next couple times you're like, okay, I see it.
Well,
I got it.
I find it empowering. The first time I did it, it might be painful or difficult, but I find it very empowering, because it's kind of like the conversation I had with another lady, is I'm doing a dance with my money. My money is my dance partner. And me checking in with my money and me doing that deep dive in there is making sure that we're doing a dance that we like. Right? That we're doing the tango. We're not doing some off the wall dance we don't like, or money's not going where I don't want it to really be going. And the other thing I tell people is it needs to be aligned with your values and your desires. And how are you going to know you're staying aligned if you're not doing a check? We all spend out of alignment every now and then. Every single person, every single entrepreneur, everybody does. And if they tell you they never do, they're lying because we all do. I do it. And that's the reason why I do quarterly checks on mine. I recommend at least twice a year. There's been one year I did it twice a year, and Lisa, you need to go back to quarter.
because how can you reset? So when
Hmm.
I look at planning, I do a lot of planning for my clients and the direction and make sure we're doing it. And every quarter or month or week, if you come back and do a check, did the task that I did this week lead me closer to the goal that I want to apply, right? And if you wait too long, if you wait a month, then you're only getting a check monthly and you can't put yourself back on record. But if you do a check with yourself weekly, did these appointments I cover this week, did I achieve the goals that I needed to achieve this week so that my month looks good and my quarter looks good and I'm on goal to hit the goals that I wanted for this year? You have to look and you have to do the checks, whether it's financially
Hmm.
or your time management or the type of clients you're working with or the
Hmm.
products you're selling. Are you spending a ton of time on a product that has low margins, or are you spending more time on a project that has higher margins and higher lifetime value to the client and to my bottom line? It's understanding the numbers in whole of your
Hmm.
business.
Yep.
And
And here's the cool thing too, is those numbers change, right? So what your answer is one quarter, which is the reason why I swear you should do it quarterly, is because I didn't. I didn't last year. I was looking at the money, but I wasn't looking at the numbers where you're talking about the clients and stuff like that. And if I would have noticed I was already out of alignment. I would have noticed that there were changes that needed to be made instead of it all of a sudden being a mass uproot.
And those are the
And
little things. If you block out, I have on my calendar, and this is one of those little incremental changes that you can do as well. So I block out on Friday afternoon between 3 and 5, which is my own business growth. Yeah, I can go, oh, I'm done. I'm going golfing, or it's an early weekend, or whatever it is. And I can take that away from my business. Or I can say, look, I'm not scheduling any clients because, oftentimes nobody wants to work on a Friday afternoon, but that's my time where I'm going to go in and do that reality check on my books. I'm going to do that reality check on the direction of my business. Am I in alignment, as you said? Am I doing the things that really only I can do, you know, in my business? And that's that reality checkpoint. You can even do this reality checkpoint with your employees, if you have employees, to be able to say, hey, let's look at a system or process you have that you can improve, right? So again, little incremental changes go through the entire process of your company, from financials to time management to offers to client alignment to employee engagement. All these things can be done with just little improvements. Pretty soon, you got a sound running business that's running well. You've got extra time, you've got more clients, you've got more money. You're a happy camper because that's what business was supposed to give to you when you signed up for this crap, when you open the doors, rather than the 60 hours a week and working on Saturday,
yeah.
catching up on
Yeah.
holidays and driving yourself crazy.
Yeah, I refuse to work 60 hours. It's not happening. I did that too many years in corporate. Yeah, and you're right. And I think the biggest thing I want people to take away from this, my listeners to take away from this, is implementing small changes like a reality check each week, not just on your finances, but of course, money, because I'm talking about money, but realizing that when I say everything affects your money, I mean it. So doing a reality check on, are you growing your client pool, right? Meaning, are you having more people added to your friends list or your connections on LinkedIn? Are you reaching out to people and having these connection messages? And this is something I do. It's called KPIs, right? We all know what they are. But it's, okay, how many people did you reach out to? How many are you actually connecting with? And before I was saying, oh, I don't know, I'm doing this
what's
and
your
this.
sales conversion? Everything's a number. Everything's a
And
number.
all of that, all of it is going to convert to sales, which converts to money, which converts to you making revenue, which converts to creating, retaining, expanding wealth. So therefore it all all of it has something to do with the money, and it all matters. Now, and this key thing is you ain't got to spend hours and hours and hours and hours. That's the reason why I wasn't doing it at first, is because I was like, I do not want to spend hours tracking all this stuff. Okay, once I created the spreadsheet, honest to goodness, it does not take long at all.
Nope.
And
the first time it does. The second time it gets faster. The third time it's easy, and you're like, now I got an extra hour. What can I do?
Yeah,
right?
it doesn't take long at all. And
Exactly.
and you can do it on a Monday for the previous week, or do it on a Friday for that week. I have a lot of clients who take Mondays off, and the Monday of each week they look at the previous week to set their week up. It doesn't matter. It's do what works for you, and it's just make these small changes, because those small changes is what's going to create and retain and expand your wealth. That the small changes is what's going to bring the profit up, right? So that you can have a profitable business. Real quick, because I know we're almost out of time, but will you please tell them about the free offer? The free offer that you have for my listeners today, please.
Absolutely. So I'm all about adding value and providing things and talking about some of the stuff that maybe we learned a little bit today. So I have two things for you. And I know you should only give one, but I'm just generous. So the first thing is I created a profit booster playbook, which is a mini novella of sort that has, pages filled with really good, solid 3 strategies and the action items that you need to take on those strategies to keep more money in profitability in your business. So if you go get that at boostingprofit.com, it's free. It's helpful. You're going to get the wheels started in your mind. These are things that you can turn around and do tomorrow and start adding into your business. And they're so, so valuable. And while you're at it, the second thing I did, because I had so much fun in using AI lately, I created an AI-driven business profitability calculator. And everything is private. I don't see any of your information. You put your information in on your business. Remember, garbage in is garbage out. So you put your information in on your business, and it'll tell you how close you are to the profitability goal that you're looking for and some ideas to help improve it. So you can get that at boostingprofit.com/calculator. So the booklet's at boostingprofit.com, and the calculator is just /calculator.
Oh, awesome. Both of those will be in the show notes. So you'll be able to click the links in the show notes. Thank you so much, Marcia, for being a guest on my show. Absolutely. I truly appreciate it. It was an awesome talk. And I hope that my listeners, you get out of this is that you don't have to make massive changes. It's the small changes that lead to those massive results. Yeah, that lead to those big results and those massive results. And I think if there's anything that you get out of that, that is what I would want you to get out of it. So until next time, remember to stay sassy. Bye.
Bye. Thank you.
Thanks for joining us this week on Cash and Sass. Check us out on social media and on our website at www.thesassywealthcoach.com, where you can download my free Money Story Start Guide. The website again is www.thesassywealthcoach.com. And as always, subscribe to the show to catch every new episode and leave us a review so we can continue to bring you fresh content. And remember, yes, it is possible to have sassy and sexy money. See you next week.